All right. Well, thanks so much. Okay, let's get to the Dow. Lost over 3% yesterday, even after the Treasury unveiled its plans to bolster the financial system. Our next guest says the package has not put a floor in the markets, and the Dow could plunge to the 9,000 point level. She's Diane Garnick, investment strategist at Invesco. Diane, great to have you back on the program. You're not happy at all with this bailout package being announced by the Treasury. You say that the key thing to watch out for is what's going on in the money markets. What do you mean?
Well, I mean, think about what happened, right? People go and they invest in money market funds, and instead of getting 4% at the bank, they get 4.25%. And over time, they knew they were getting a higher yield, right? Now, money markets turn and they need to break the buck. So the federal government steps in and they say, $50 billion, we're going to shore up those money market funds. And I wonder to myself, when people get 4.25% returns instead of 4% returns, well, are we asking them to give back those incremental returns? They knew they were getting these extra returns because they took on extra risk. So I think, well, the federal government steps in and they give all of these assurances to people that are getting higher returns. Now let's take this policy and increase it. Let's, instead of giving $50 billion to shore up money market funds, let's take $800, $900, $1 trillion and shore up mortgages and credit cards and student loans. And I think, gosh, think about what's happening. Greenspan is saying now, this is a good time for us. We need short-term action to take care of the markets. And I wonder, is he thinking about the long-term implications?
Yeah.
Right?
Well, that's what a lot of people are wondering. All right,
Absolutely.
Diane, we'll be back with you, of course, right after the break. And we'll ask Diane why she thinks the Dow could reach 9,000 points. Well, we are back with Diane Garnick, investment strategist at Invesco. Diane, right before the break, I was telling our viewers that you see the Dow sinking to 9,000 points. That's about 18% lower from where we are now. What do you think is going to happen? Why do you say it?
Can we just think about economic reality here? The SEC has stepped in and said, no more shorting financial stocks. And then they said, okay, so we're going to expand that list beyond. You just said GE downgraded, stock trading down. Well, guess what? GE is on the list of no trading
United
down.
Healthcare, GM,
right.
all
exactly.
those,
We have normal companies, right, that are now on the no shorting, right? No naked shorting allowed. And think about what happened in the financial services sector where no shorting is allowed. Yesterday, 7% decline, 7%. We are facing a tremendous issue here, not just in financials, but consumers have zero ability to spend. Right? Analysts are out downgrading. Every CEO that we speak to is saying, their outlook is becoming more and more negative. So I think it's realistic. The Dow that low happened all the way back in 2003. And if I was sitting in this seat in 2003 versus sitting in the seat now, I was much more optimistic about the growth of the economy then than I am now. Right?
By the way, what are your clients asking you? What are they saying
I had
right
an
now?
unbelievable number of calls yesterday, not just from clients, from ordinary citizens. This is why the package is under so much trouble, because people are calling and saying, thank you for telling the truth. And I just need to find out, is America in trouble? Is America facing bankruptcy? What do I do? Do I put all of my money in cash?
What are you telling them?
This is one of the most horrific scenarios that we have had to face in our investment professional careers, right? The bottom line is we're going to finance this with what? All of this debt, all of these offerings. Sovereign wealth funds are going to step in and buy all of this debt. So what's the bottom line? We're really selling a lot of America to all of these foreign entities. It's not going to be, by the time I'm their age, right, in their retirement years, I guess, the U.S. is going to be owned by all of these sovereign nations. And you know what? Well, I hope they renovate, because we need a lot of help around here.
I don't know about that, but
what is this? Flip this country.
But that
should be the name of this package.
Has been one trend that some people have been talking about. But Diane, tell me, I'm sure in those phone calls, your clients and also just ordinary citizens are asking you, where do we put our money now? Do we just hold on to it or what?
Now is a very good time to conserve assets, pay off debt, right? Shore up your own personal balance sheet, and then look to the asset classes that are going to give you kind of lower levels of risk. I think fixed income makes a lot of sense right now, right? Those are the places where it makes a lot of sense. The equity market, I'd be very cautious right now.
Well, in this though, higher volatility, range trading, no real leadership right now in the markets.
Yeah.
I mean, would you be saying that, would you say to bail out of the equity markets, or would you just have where would your allocation be, I guess?
I would significantly overweight fixed income. You know, is now a good time to buy equities, U.S. equities? Probably not. Is it going to be in 2 quarters and 3 quarters? Hold on, right? We are looking at some pretty bad earnings. Even if this package goes through, 6, 7 years of borrowing, overextending, and we're going to solve this problem in 6 weeks, I don't know. But let's pretend this package does get through. We're looking at easy, 4, 5, 6, 7 quarters of bad earnings. That's not a good time to buy the market, right?
Diane, always a pleasure to have you with us. Thank you so much. Diane Garnick, investment strategist at Invesco, and of course, a lot going on in the markets for us to talk about and coming.